But we are tracking here the way that the Paycheck Protection Program, of course, the program set up to help small businesses that are struggling across the country with loans that convert into grants so long as they keep employees on their payroll. That program has drawn new scrutiny from the Justice Department for the way that some people have applied for aid that may not have qualified, as well as some fraud alarm bells that are going off there. For more on that, I want to get to Yahoo Finance's Brian Cheung, who has the details. Brian?
Zach, the Justice Department saying that it will look into possible fraud among businesses that are applying for those Paycheck Protection Program loans, which, as you mentioned, are supposed to be targeting those small businesses under 500 employees that really need help. But Bloomberg reporting that the DOJ is actually contacting 15 to 20 of the largest lenders under the PPP program to see if any of those borrowers actually misrepresented payroll costs or the number of employees or even the nature of their businesses when applying for these loans. Keep in mind that the PPP loans were contingent on, again, the company having less than 500 employees, having a need for that loan because of the COVID-19 related disruptions, and also that we're a certain type of business. If there are actually companies that define themselves as a NAICS code 72, which would be hospitality or accommodation, there was a possibility they could actually be exempt from that 500 employee threshold. So a lot of concern that a lot of companies, when they were applying for these PPP loans, may have misstated the actual number of employees that they had or the types of companies that they were. For what it's worth, this is not necessarily a new development that there would be this scrutiny. You had Treasury Secretary Steven Mnuchin earlier this week saying that he would be auditing any sort of loan that was originated that was larger than $2 million. Keep in mind that if you break down the SBA numbers, I believe we have a chart here, it shows that about 28% of the money, if you break it down as a percentage of the original $349 billion, that means about $95 billion were represented by loans that were larger than $2 million. So a lot of legwork for the Treasury to do as they review all of these loans and try to make sure that this taxpayer-funded money was really going to those businesses that needed it.
Yeah, we did hear from Secretary Mnuchin stress the fact that the criminal liability for anyone who filed that didn't need it or didn't qualify would be on those applicants themselves. So very clearly stressing kind of, I guess, the threat here that there is some real criminal problems that would be persecuted here. And we're hearing that from the Justice Department as well. Those threats are not empty. But on the front of the public companies that did receive this money, that was a lot of the outcry about this program, that a lot of the money we saw returned from the likes of Shake Shack, Ruth's Chris Steakhouse. When you think about some of these publicly traded companies that did receive PPP money only to turn around and give it back. And when you look at that, it seems like that was not just anomalies. There was actually a good amount of money from this program that still made its way to publicly traded companies.
Yeah, that is the case. And to what degree you want to argue that's legal or not legal is actually quite clearly defined in the CARES Act. So what I was just talking about is fraud from the perspective that it's a company literally misrepresenting to their lender what the status of their business is. Now, that would be prosecutable under the current law. But when you talk about those publicly traded companies, a lot of them actually were able to get a loan under the statutory obligations that were laid out by the CARES Act, which appropriated the original $349 billion and then the additional $310 billion as we began last week. Now, here's the question, is that should those companies have gotten it in the first place? Well, that's a more, I guess, high-level debate that the lawmakers should have had before they passed the CARES Act and before they passed that exemption that said, yeah, you could be a company that's got more than 500 employees as long as you're in accommodation and in food services. Now, again, that's how Shake Shack and Sweet Green Potbelly Ruth's Chris got that PPP loan, not because of a loophole. It was literally stated in the law that they could exempt that 500 employee threshold. So those companies mostly gave that money back as a matter of optics because they were either able to go into the public markets to get money anyway, or because they just didn't want to have that stigma attached to them as being that company that took that taxpayer money as opposed to all those other small businesses on Main Street that truly needed it.
Yeah, that's a good point. Brian Cheung, bring us the latest on the PPP front. Appreciate you breaking that down.